All right, all right. I'm super excited to finally be here with you guys. Super excited. Super excited and welcome officially to Swing Trade FX Bootcamp 2.0. The purpose of the bootcamp is to have a 3 days marathon intensive Forex, trading sessions where we stay for two good hours to actually break down the market and bring to your understanding everything that has been missing in the market. First of all, I would love you guys to condition your mind with the understanding that this market is very easy to understand. This market is very easy to understand. And usually, from my experience over time, is that a lot of people get what we call the information paralysis. And what I mean by the information paralysis is you have a lot of conflicting informations about the market. And many people, the mindset and the motive behind trading is what has caused them the frustration they are having a day. And I hope in this Forex bootcamp, you can be able to identify the wrongs. And I'm not here to just help you identify the wrongs. I'm here to put you on the right path, to empower you with the right skill. And I want to say welcome again, guys. So let's get straight into what we got for today. So if you have a question, you can keep it to there's going to be time for the question. So this is what we're going to be looking at today. We're going to start first with the introduction to the mental frame of Forex trading. This is very important for everybody to understand because there's a difference between learning in a non-structured way and learning in a way that has a structure. So I'm going to be taking you and walking you through every single bit of the structure on where the market works, okay? So we have the mental framework of Forex trading. Just like you try to build a house, you draw the plan. And most people do not actually have an understanding that you need to have an organized knowledge. What do I mean by an organized knowledge? You need to have a mental organization of every single steps of the Forex market. You cannot actually achieve sustainability in something that you don't know the structure and you don't know the framework upon which you work and have an organization, especially when it's psychological, mental organization of the market. Then I'm going to introduce you to multi-time frame analysis. As you guys know, I'll give you the blueprint to multi-time frame analysis, how you can identify and how you can successfully analyze the market just from the in-depth understanding of the core of the chart structure principles and how to know exactly what to look for. Then I'm going to take you guys to, from the introduction, I'm going to take you guys to actually achieving the mastery in multi-time frame analysis. Give me a second. Let me get some water. So, thank you. So, I'm going to show you guys how to find value areas in the market. What are value areas? Value areas are points in the market where when the market gets to, you are most likely going to find a trade opportunity. That is what a value area is. and I'm going to introduce you to what the key value areas are. What are the tools we use in finding these value areas? As you guys know, you don't need all the tools. You don't need any indicator. Then I'm going to introduce you guys to trading strategy. Okay? Most people think multi-time frame analysis and strategy are the same thing, but they are two different things. They are two different things, okay? And that is why most people make that mistakes. Then I'm going to show you guys the, swing trade effects of reversal strategy variation, the questions and answers. Now, I'm not going to rush you guys, okay? This first course outline is the most important. Is the most important one in the market. This first course outline. So I would like you guys to take your time for us to get straight into it. So let's get straight into it. So introduction into the mental framework of Forex trading. Now, I know when you guys started to learn about the Forex market, it's a lot of informations that you guys saw. And many of these informations are conflicting because they don't have a context to them. And what you cannot have a structure to, you can never achieve sustainable results with it. So, do you guys want to give me a quick chat? I just want to tap off your idea, right, from the chat box. What is the summary of what we're doing in Forex trading in the short? What's the summary of everything? So I'll give 1 minute for that. It's okay. It's okay. Someone said we're here to make money. Money is the byproduct. Money is the byproduct. All right. So the whole idea of Forex trading is your ability to actually take advantage of the weakness and the strength of different currencies and be able to position yourself, ahead of, a perceived weakness or a strength of how the market works. So we're not here for all of that. So let's get straight into what we got to do. I will give you what Forex trading is in a nutshell to start with. What Forex trading is in a nutshell. There are steps to what we're doing in the market, right? So the first thing that you want to do is have a pair to trade. Okay? You have a pair to trade. Then the next thing, the next framework in Forex trading is the analysis. In this case, I want to teach you guys the multi-time frame analysis. The next thing after the analysis is you want to position yourself to and time yourself to finding an entry. Am I correct? If you're feeling, you can drop a chat. Finding entry. And the next thing is what? Very important. When you find your entry, you do that upon risk management. So both of these are intertwined. While you're looking for the entry, you're planning your risk management. The next thing you want to do is what? Finding exits. And the next thing you want to do is managing your trade until you get the outcome of your trade and the cycle goes back. This is what I call the cycle of trading. And why is this very important for us? You see, as a trader, you need to be aware of all the sides of your daily activities in the market. So you can easily label this is your step 1. You have your step 2 right here, step 3 right here, step 4 right here, step 5 right here, step 6 right here. So apparently we have 6 steps. That means we have 6 routines we do every day, day in, day out, 5 days a week, and for the rest of the year, 52 weeks a year. So if you start to have this context, it begins to simplify the Forex market for you. So that means when you sit down in front of your computer next week, when the market opens, you know, the first thing you want to do is to analyze. Then the next thing is to find entry. Then the next thing is to, when you find your entry, while you're looking for your entry, you're calculating your risk management and you want to find exits and manage your trade. This is the framework of market. Every trader, regardless of your strategy, regardless of how you trade, regardless of what you trade, regardless of the market you trade, follows this 5 basic mental framework. So what is the importance of having this mental framework? It's very simple. At every point in time, you have an understanding of the step you're in. So if you find yourself looking for trade entries, you just want to find a trade you can up in without analyzing, you know you've skipped a step, and you know that's detrimental. You know that will cause random results. It's going to produce only random results for you. If you're finding your entry and you're not doing that upon risk management, you know that that is erratic trading. And if you are looking for your trade, you found your entry, and you do not have a proper understanding of finding exit, you only enter the trade open is going to go in your direction, you are actually trading erratically. And when you finally have your trade on, when you do not manage your trade according to the principle of trade management, you should know that something is missing. So the awareness of this gets you as a trader to be able to ask yourself question, okay, have I analyzed before I found my entry? Okay, now that I've got an entry, did I do that upon risk management? What skill do I need to calculate my risk management? The position size. We're going to get there. Okay, did I find my exit, or I just entered open? Hoping the market is going to keep moving in my directions, right? These are all the things that you will now start having this mental pattern and mental attitude towards trading. So I want you to pay attention, because as I'm teaching you about the technical side, it's been accompanied by the psychology of each phases. So do you guys understand? Let me know in the chat box, do you understand everything I've said so far? So now, this is going to be the framework upon which we're going to go into our learning. And it's going to be a fun time. You're going to have a lot of relative examples. So now that we know the 5 or the 6 steps in Forex trading, basically 5, having to choose a pair does not require any skills, right? So we have 5 actually. We have 5 of them. So what we're not going to do now is, during the course of this bootcamp, we're going to take every single step one after the other and look at it in depth. What I'm trying to do for you guys is now I want to give you guys an organized way to understand the market. So if you know that all you got to do in the Forex market are only 5 things to achieve results. So we're going to take every single step of it, step 1, and we're going to look at it in depth. We're going to look at it in depth. So this is going to take us to the next point we want to talk about today, which is what? The multi-time frame analysis. So this is where we now take this one right here and we'll go break it down. So let's talk about the multi-time frame analysis. It's going to be, we're going to be sliding into every step of Forex trading in a very systematic way, so that you see there's a difference between having the knowledge and effective communication of this knowledge to your understanding. And that's what makes the difference. I know that's what a lot of you guys can relate on my YouTube, because the first process of learning is to be able to communicate it to people's understanding. So now maybe a bunch of you guys are beginning to see that, oh, perhaps I do not even have the right framework. I do not even have the right framework and the right approach to Forex trading in the first place. So how do I expect to even be successful at this? Because I'm not aware of the framework upon which the Forex market works. And some of you now are beginning to see that, oh, okay, if I'm able to take care of those 5 things, that means I can do it over and over and over and achieve consistent results over and over and over. It's beginning to make sense. So what is multi-time frame analysis? Multi-time frame analysis. Before we define it, we want to talk about why we do the multi-time frame analysis. What's the why? You see, I love to use a very popular relative examples. Give it like you guys are all on a vacation and you're supposed to stay on the first floor of a 5-star hotel. I want you guys to pay attention, because this relative example is what I want to sediment in your mind so that you can see Forex trading from a non-technical point of view. A non-technical point of view. So, and you can see that everything you do in Forex trading is relative to your experience in real life. If you go to a 5-star hotel, for example, and you want to lodge there, you stay on the first floor, what do you most likely expect? You get to see a lot of great cars, a lot of great details, a lot of beauty, right? But if you decide that you want to stay on the 40th floor, right, which is a higher floor, what do you tend to do? What is the reason why most people stay on the highest floor? Because of the view. Am I correct? In the comment section, am I correct? Because of the view, right? And it tends to be more expensive. Now, the person who stays on the first floor cannot have the view of the person on the 48th floor. And the person on the 40th floor cannot see the details of the kind of cars and the people and the beauty of the environment that the person on the first floor sees. So at the end of the day, there's a pro and con to staying either on the topmost floor or on the first floor. So what is your best way to experience everything? Goodness to the invention of the elevators. Most 5-star hotels, you see them, they have transparent elevators, so that while you are in on the first floor, you can be able to have a scenic view of the environment as it changes from the details from the first floor. And as you go up, it changes, the details gets blurry, it gets less visible, but the views start to what? Expand. So this is the same thing the multi-time frame does. The multi-time frame helps you to look at things from a higher point of view and break it down to the simple details. Do we all understand that analogy? Do we all understand? So the multi-time frame does not restrict you to one part. It doesn't restrict you to one part of the market. It helps you to see the market from the best views that you can ever get. So when you look at it from the best view, you have an overall context and awareness of the whole environment of the market. Then as you come down the lower time frame, it's like you're bringing the elevator down. The more you get down from the higher floor, the more details you start to see. Those things which seem to be tiny now becomes more bigger and they have more details attached to them. This is just how the multi-time frame works. The multi-time frame analysis allows you to see the whole environment, the whole view of the market from a broader context. And as you come down, as you climb down every time frame, you start to see the details. And this details is actually what you finally use to make decisions that is going to happen over the higher time frame, over the view. Does that make sense to anyone? So this is the whole idea of multi-time frame analysis. So what is a multi-time frame analysis? From the analogy, you can actually have an understanding that multi-time frame analysis is the ability of a trader to look at the market from the highest point of view, look at all the details, and keyword, I want you to pay attention, and systematically breaks the market down to the lower time frame while connecting the information on the higher time frame. Many people think they do multi-time frame analysis, but they do not connect. They do not link a time frame with another. So what do I mean? If I'm breaking down the higher time frame, the daily time frame, there must be a link that connects me to the details of the 4 hours time frame. And from the 4 hours time frame, there must be a link that connects me down to the details of the 1 hour time frame, which is with respect to what is happening on the higher time frame. Most people just do whatever they want to do on the daily time frame. No linking, no context. They come to the 4 hours time frame, make decisions, come to the 1 hour time frame, make decisions. At the end of the day, something isn't connecting. So I want you guys to start to learn that. So on every given multi-time frame analysis, there must be a lower time frame context that is connected with what is happening on the higher time frame. You can write this down in your journal. And maybe whenever you replay this, you can actually take it down. So what is, now that we have been introduced to multi-time frame analysis, the next thing is, let's talk about advanced multi-time frame analysis mastery and how to use the multi-time frame analysis to find key value areas in the market using Swing Trade FX Blueprint. Now, some questions is supposed to start to ring in your mind. What is the purpose of multi-time frame analysis? I don't want you guys just to be zombie traders. I call a lot of people zombie traders because everything that has been sold to them, they take it for it and they never question why. Why am I doing this way? What am I trying to achieve? What's the result I will achieve when I do this? Why? What is the purpose of multi-time frame analysis? What is your why? And you guys are going to have a great light bulb moment when you understand this. And pay attention. Notice how we've never gone into anything technical, because in the grand scheme of things, Forex market is not really technical. It's more psychological. You need to understand. All you need to do is to have a mental framework of how it works, and you're going to find yourself doing less chart work while achieving results that most people cannot achieve. Don't be a zombie trader. So I'm trying to build you guys into a community of traders that are well seasoned. Well seasoned. If you have any comment, please don't try to unmute yourself. You can't do that. Just send a chat in, okay? And I would like you to rather listen before you even ask those questions and note those questions down. Because at the end of the class, we're going to ask questions. The purpose of the multi-time frame analysis is for you to break the market down into its detailed fragment so as to spot a potential opportunity. I'm going to use this analogy. I love to use relative examples to market. My goal is to make Forex market the least technical endeavor you can ever do. Look at the multi-time frame analysis as the vehicle that conveys you to the airport. You want to travel on a vacation. Multi-time frame analysis is the vehicle that takes you to the airport. The vehicle is not what takes you to your vacation destination. Am I correct? Yes or no? I've never seen that car being invented from one country to another on the air, you know, except you guys have somewhere like you've seen it before, maybe in movies, right? I'm talking of a four-wheel car cannot take you from where you are to another country when you're traveling overseas to another country for vacation. But the vehicle has an important role in your journey because it conveys you to the airport. It gives you an opportunity to board the airplane. So the multi-time frame analysis is the vehicle that brings you to your opportunity for you to hop on the flight. Hopping on the flight is now you finding entry. Does this make sense, guys? Because if you start to understand what these things are and their purpose, maybe you will start to be more patient. You will start to wait. You will start to see things the way they truly are. The purpose of multi-time frame analysis is to open the market down to the details to bring you to the most recent potential trading opportunity in the market. Most people confuses multi-time frame analysis as a strategy. When I ask many people, what strategy do you use? They said, I use the multi-time frame strategy, multi-time frame analysis. No, multi-time frame analysis is just a form of analysis. Multi-time frame analysis is a type of analysis that you carry out under technical analysis. There are different types of analysis. There's the fundamental analysis, there's the sentimental analysis, and there's the technical analysis. Under the technical analysis, a form of analysis is multi-time frame analysis, which has proven to be the most effective because it gives you every information the market has to have to offer you. So next time you are on your chart and you are within the mental framework that I'm teaching you guys right now, and you know that the first thing you need to do is to do your analysis. You are now aware that all you got to do is your multi-time frame analysis. And what is the purpose? What are you trying to achieve when you do the multi-time frame analysis? You are trying to arrive at a point where you can find a potential trading opportunity. Am I making sense to you guys? Does it make sense, guys? So now that you've understood the framework, the mental framework, the psychology behind it, notice how for the rest of this bootcamp, I'm going to give you the psychology first before I now go into its application technically. So that you have an idea of what you're doing before you even start to carry it out. Just going in for the technical side of everything is like you making efforts. Effort doesn't produce results. Effort does not produce results. Productive effort is what produces results. So now, How do we carry out this multi-time frame analysis? Now that we understand that the multi-time frame analysis is a vehicle that takes us to our destination of potential trade opportunity. Keywords: potential trade opportunity. Potential. That the word I want you to know is potential. Many of you guys, when you are analyzing the market, the moment you're done with your analysis, you feel entitled to enter the market. No, at that point where you're done with the analysis, it's a potential opportunity. What are your confirmations before you enter? And the point of confirmation is actually where trading starts. So how do we do the multi-time frame analysis? Let's go on the live chat real quick. I'm going to be giving you different steps. Okay? So before we go on the live chat, let me just highlight it. So we call it the steps in multi-time frame analysis. So we're going to go to the number one. The first thing you want to do when you're analyzing the market is to what? Observe and identify the overall trend of the market on the higher time frame. I'm going to give you specific to cut all the noise off. I'm just going to give you exactly what you need to do. Start from the daily time frame. Every information you need is on the daily time frame. The beauty of the daily time frame is the most important time frame in the market. The beauty of daily time frame is that daily time frame connects the much more higher time frame with the lower time frame, so you can be able to get what is happening in the most recent point. So what do I say the step one is? Observe and identify the overall trend of the market. If you do not know the overall trend of the market, you cannot have a context to where the market is moving. You want to know, do I trade in direction? Am I seeing this opportunity in direction of the overall trend on the higher time frame? Or is this direction against the trend and it's just a temporary retracement that might seem to be maybe a direction? For example, if the market is moving on a bullish market, sorry, give me a second. Sorry, gotta take water. If the market is moving, for example, now look at this analogy. Let's say if the market is moving on this structure, okay, let me make it more clear. Let's say the market is moving on this structure on the daily time frame, and the overall structure of the market looks like on the 4-hour time frame. Then on the 1-hour time frame, you see a trade opportunity and you got in at this point. What does that tell you? It tells you that you're trading against the trend and you should take your profits at the retracement level, either at the Fibonacci level, so that you can be able to continue in the direction of the trend at this point. Does this make sense to everyone? So you see the importance of understanding trend in the market. So the first step to any multi-time frame analysis is to do what? Is to identify the overall trend in the market. The second step is to identify the structure leading, the structure forming that trend. Do we get it? First, you want to look at the trend. Okay, you see what seems to be an uptrend. Then next, you want to see the structure leading to that trend. Okay? You want to see the structures leading to that trend. And this is very important. The trend, looking at the trend is like looking at a human being for just their physical appearance. But looking at the structure of the market is looking at a human being through the lens of an X-ray. It's a different case scenario. Am I correct? Am I correct? When you look through the lens of an X-ray, you tend to see the bone, the joint, and everything. But when you tend to look just through your physical eyes, you see the flesh. You see, the true nature. You see the what they look like, right? So the skeletal system of the market is the structure. So that means you know the trend just from having just a look on of it, and then you begin to interpret the trend from a structural point of view. This is the second thing that you must learn. So you want to identify the structure forming that trend. So what is the third thing you want to do? Then you want to start to identify zones, key zones affecting that trend. You first observe the trend, you identify the structures forming that trend, then you now start to identify key zones. And you know what you do? You see these three things? These three things, right? You repeat it on all time frames. You repeat them on all time frames. So the time frames I recommend. Now I'm giving you a recommendation based on my discovery in the market and what has worked. Is the daily to start. They take it down to 4 hours, repeat the same thing, link it down to the 1 hour. When you start to get to the 1 hour time frame, you begin to see the opportunity, potential opportunity. Then you can go to the 30 minutes time frame, as the case may be. I find the 30 minutes time frame and the 1 hour as a very good area of confirmation if you want to be a swing trader. If you want to be a day trader, just go to the 15 minutes time frame. I don't trade the 5 minutes time frame. It's too much noise in there. So you can imagine, let's go over again. You go to your daily time frame, you get the trend, you identify the structure, and you identify the key zones. And all you got to do is go back to your 4 hours time frame. Within the key zones of the daily time frame, you want to identify what again? The trend of the 4 hours time frame, the structure forming the trend on the 4 hours time frame, the key zones on the 4 hours time frame. So I will give you guys a prototype of how this works. This is the three things we're going to do on the multi-time frame analysis. Okay? So now what we're going to do now is I'll take you guys into how this works. How this works. So now I'm going to make an analogy. Okay? So I want you guys to look at this. Pay close attention. I'm going to use the black line for a daily time frame scenario. So let's say On the daily time frame, you found this trend. You found a trend like this, and the market is right here at that point. Or perhaps, let's say the market is making a move. Sorry. Let's say the market is making a move like this. So the first thing you want to see is what? The direction of the trend, right? This is the daily structure. Am I correct? Now, where is the last key level? Here. The last key level right here is this point, right? This is the last higher low that led to market gain to where it got to. So perhaps at the point of your analysis, GJ is moving at that point. So where is going to be your high? Now you have a high here. Now, what you've been able to do is, number one, you've been able to identify your trend. Now, I want you guys to answer me. This is now we are getting into the technical side. What is the obvious trend of this market? Is it bullish or bearish? Bullish or bearish? Bullish, correct? Now, let us now identify the structures. I'm going to label it. Now, let's say this is the low. This is what? The high. Now, let's label it. Let's label it together. What is this point? We have the higher low. Am I correct? And we seem to have a point which is the higher high. Now, what have we done? Have we been able to respect all of this? We've been able to respect what? Number one, finding what? The overall trend. The second one, have we been able to label the structure that led to that trend? Yes. Let's go back so you guys can see. Take your time to observe. Did we get a trend? Yes or no? I want you guys in the comment section. I want to engage you guys now. Did we get a trend? Yes. Did we get the structure? Yes. Am I correct? Now, do we get key levels where the market must have rejected from? Yes or no? Do we get the key levels? Yes. Now, do you see this make sense? Now, the next thing you want to do, you've been able to do your 3 due diligence right there. So all you got to do now is take these now. Hold up. All you got to do now is take this right here to the 4 hours time frame. So let's say we're already on the 4 hours time frame. Well, the 4 hours time frame. So we're bringing it right back into the 4 hours time frame. Now, do you know the points we want to bring into the 4 hours time frame? We only want to bring this low right here, and this high into the 4 hours time frame. So our goal is to break this, all of this low and this high, take it right into the 4 hours time frame. And now let's draw it out. On the 4 hours time frame, we found the most recent low and the most recent high, right? So what seemed to be this low to this high before it fell down right here on the 4 hours time frame, because it gives us more details, like I explained earlier. Use the analogy of the elevators and the 5-star hotel. So now what do we want to do? We've dropped down to the 4 hours time frame. So I'm going to use the red for the 4 hours time frame. Now, what do you think the 4 hours time frame is going to look like? It's going to look more like this. Smaller structures right here. Smaller structures right here. And we have this. Are we correct? Are we correct? Does this make sense, guys? Very good. Very good. Very good. Now, I want us to answer our 3 questions. What is the overall trend on the 4 hours time frame? From the daily low to the high. It's still a uptrend. Are we correct? What is the structure leading to the trend? So let's label it together. We have a high, we have a higher low, we have a high, we have a higher low, we have a higher high, we have a higher low. Sorry, let me add one H. Right? We have a higher high, we have a higher low, we have a higher high, we have a higher low, and we have a higher high right here. Have we been able to get a structure of the market? Have we been able to get a structure of the market? Have we been able to get a structure on the 4 hours? Yes or no? Have we been able to get that? Good. So for the most significant, which is the key levels, now, where would you say is the last higher low of the market? Right here. And that is all. So what do? You take this down into the 1 hour time frame. So let's look at the 1 hour time frame. We still have the high. So I'm going to use the high. The high and the low is still the daily one, right? So let's draw it out. Sorry, let me bring it in. So let's say this is the 1 hour time frame. So now we're having this high right here, and we're having this low right here. So I'm going to use the green for it. So what do you think the 1 hour is going to look like? Definitely a little bit smaller, right? It's going to look more like this. Then it's going to look more like this, right? It's going to look more like this. It's going to look more like this. Then it's going to look more like this. So we're going to have something like this. Then we're going to have something like this. Then for the final drop. And at this point right here, what do we have? We have the last significant low on the 4 hours. Okay? So let me take this down. Let me draw it again so that we can have it in the middle so that you guys can see what I'm trying to show you guys. So we're gonna have some like this. Sorry. We're gonna have some like this. You see? And then we're gonna have something like this. Then it finally drops right here. So what do we have right here? Remember the red? Let's go back on the 4 hours time frame. This is the 4 hours time frame most significant what? Low that got broken. So what does it look like on the 1 hour? It has broken this point. So now that it has broken this point, at the 1 hour level, you're already having a potential trade opportunity. Because you know what? Let's now label what is the overall trend of the market on the 1 hour. Now that you can see it more visibly, what is the overall trend of the market? Number one, is it still bullish at this break or bearish? Is it still bullish right now? This is where it gets tricky. On the 1 hour time frame, what does it look like? It's bearish. Why? Because of this point right here that got broken, right? And the trend that led to it right here on the 1 hour time frame. Now, is it beginning to make sense? So let us now look at the structure of the market. So let's identify the major structures. Now we are having two structures, right? So we're having the high, we're having the low. We're having the higher high. Now we are having what? The higher low. Now we're having the higher high, most significant, and we're having the what? Higher low. Then we're having the higher high. Then we're having the what? Higher low. Then we're having the higher high. Now, what do we start to have right here? We start to have the downtrend. Because of the fact that the market broke this point right here, it tells us that the market is going bearish. Okay? So what do we start to do? We now start to identify this smaller structure, right? Then after this higher high, we begin to have smaller lower highs. I'm going to indicate with the red and a smaller letter. So, sorry. We have the what? We have the smaller low. I'm going to use the term small. The red means is the low, right? Now, what are you having now? Lower high. Sorry. Yes. Then you have the lower low. You have the lower high. You have the lower low. You have the lower high. And now, so far, you have the lower low. Can you see how we've been able to identify that? So now, this is what it looks like on the 1 hour time frame. Am I correct? So now, if you now want to amplify this right here and bring it down to open it up on either the 1 hour or 30 minutes, because they usually are alike. So now, let's put amplifying 1 hour / 30 minutes. What does it mean? Now, look at this carefully. We are going to take it from this high to this low. So let us come look at it together. So I'm going to use the red. Let me first identify this point right here. So we have the daily what? Higher high, right? And at this point now, we have the market. I'm going to use the green. We have the market making a move of lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs, and it broke a level. Let me use the red. It broke that 4 hours level. Are we correct? And this is where the market has been so far. So what do you think? Now, give me a second. Sorry. The context of what led to this point was, let me just, oh, sorry. The context of what led to this point was the fact that the market had this right here and it had this, right? So now we can now see things clearly, right? Remember, this is what? Let me label them. This is what? The daily higher high. Are we correct? Right? This is what? The 4 hours higher low that got broken. So all of this now are now what? The 1 hour time frame. Hold up, let me use a smaller lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So what do you think? The market now keeps going back, it keeps going down, it keeps going down. So let's say perhaps the market gets to the next 4 hours higher low right here. So let me use this right here. I say the markets, give me a second. Let me use this right here. So sorry about the firecrackers. So look at this right here. Let's say the market start to make something like this, right? And perhaps the market now find a change of structure right here. What do you think? What do you think is happening? Are you buying against the new trend, or you are buying in the direction of the trend? So because all of these, now this is a very tricky question. Now remember that all of this is the break of structure of what? This 4 hours time frame. So everything that seems to be happening right now is the market finally made a move to this point. It's more like the market finally made a move to this point right here. Then you now found a push right here after it breaks. Is it against or in the direction? Now, this is the question. Is it against? Is it against? Notice that the last higher low has broken. Notice that the last higher low has broken. The last structure has broken. Is it against or in direction? It's definitely against. Because what you are now trading right now is this. What you are now trading right now is this. This like right here, this smaller structure on the 1 hour time frame, it broke. You are definitely trading against, because it's only a matter of time before the market continues to go down. Does this make perfect sense for you guys? Does it make perfect sense? Let me know, please. I'll give you 1 minute for everyone to comment. I want to see. So let's go back to the 4 hours. Let me give you guys a quick recap. We said this is what the multi-time frame look like. We have the market moving in direction of the trend. 3 things we want to get. Number 1, what is the direction of the trend on daily time frame? We have the uptrend. What is the structure of the trend? Higher highs and higher lows and higher highs. Then we said that we're going to take from this point right here to this point right here and amplify it to finding the details on the 4 hours time frame. On the 4 hours time frame is the same thing we want to do. What is the direction of the trend? Uptrend. What is the details of the trend? Higher, low, higher, low, higher, low, higher, low. But we realize that the last higher low gets broken. So when a consistent structure gets broken, what does that mean? A change in direction wants to happen. So apparently, price hit the high, which is a resistance on the daily time frame, which you can see right at this point, and it's beginning to move down. On the daily time frame, we can't really see what is going on, but on the 4 hours time frame, we can see that it has already broken the trend. Are you guys getting so far so good? Do you guys understand so far so good? So on the 4 hours time frame, what we couldn't see on the daily time frame has been spotted on the 4 hours, and we see that the last higher low has broken. In the traditional principle of structures, when the last higher low breaks, what does that tell you? It tells you that the structure has broken and is changing direction. So direction has changed. But then we now brought all of this from this point right here to this low right here. We amplify it on the 1 hour time frame, and it looks small like this. Then we took all of this out now and said, let us focus on this structure. This structure now, look at the structure, this trend that broke. We could not see every part of it until we came to the 1 hour time frame to now see that, oh, it's been moving on the lower highs, lower lows, and lower highs and lower lows. What we could not see on the daily time frame, we saw it on the 4 hours. What we could not see on the 4 hours time frame, we saw it on smaller structure on the 1 hour. So I now gave a scenario. Let's say the market continues to move down to this next level. Let's say the market continues to move down to this next level, and all of a sudden found a support right here. Now, are you telling me that you are buying in the direction, or you are buying against the trend for a further drop? Yes or no? That is exactly what I proved to you guys right here. That now, when you now found this buy, this only gives you an opportunity on the lower time frame to make a quick buy. perhaps to the previous area of support, then before you start to fall down. That means that you can find another example right here when you find a change of structure right here to sell to the downside. This is the whole idea of what? Multi-time frame analysis. Do we now understand? Do we now understand? Let me know. Do we now understand? Do we now understand? Now, let us now give a practical example. We've got 58 more minutes. Let us now give practical examples in the market. So everything that we've done now, let's now look at it. So now we are going to do this together, guys. We are all going to do this together. So the first things first, what is the overall direction of this daily time frame structure? Now, I'm going to give you guys step-by-step guide. You do not have to compress your charts and go and look for the 10 years ago information. All you need is to leave it right here. You can see what exactly is happening in the recent time. So now let us analyze this together. What do we have on this slow? We have where the market is starting from, right? So when we kind of look at the market and skim through it, you do a skimming through the market. What does the market say right here? What direction? Uptrend or downtrend? You guys are going to be the one to answer it. Uptrend or downtrend? Uptrend. Are we correct? Uptrend. Good. So now that we have a uptrend, what is the next thing that we want to get? The structures, correct? So let's look at the structure of the market. What do we have right here? Higher highs, the higher lows. The higher highs, the higher lows. Then a new structure start to form, which is what? Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. And we have the high right at this point. So where is the most significant lows and high? We have the most significant what? High, which is what? The key zone right here that is rejected so far. And we have this key zone right here. And we have another key zone right here. Simple. Do we understand so far? Do we understand so far? I want to get everyone's. Now I'm going to take it slow here. Do we understand so far? Do we understand so far? I want to see everyone. I want to see everyone. I don't want to move except I'm clear that everyone understands. Okay, good. So what do? We identify the spot of resistance. You can use your horizontal line right here, then later use your zones. Then we spot what? The most significant value area right here. And what do we have right here? This spot right here. And we have this level, right? Right here. These are the most significant recent value areas. We're still going to come down to what these value areas are, right? I'm just giving you the in-depth of multi-time frame. I will now start to break those terms I'm using. So what do you want to know? That means that as long as the market is concerned, this right here is the last higher low. Am I correct? And the last higher high. So this is the point where we want to link back down to the 4 hours time frame to see what the market is happening. Now we have an understanding right here that the market so far so good is on higher highs and higher lows on the daily time frame, that means it either can go back right here, or it either can come right here, break this, and come back right here. Are we correct? So all of this level is what we want to bring out on the 4 hours time frame. So let's go to the 4 hours time frame and amplify. Our area of focus is where? All of this level, to see what is happening right here. I'm going to be using the blue color for my 4 hours. So now the first thing we want to look, what is the trend on the 4 hours? So far so good. Is it a bullish trend or a bearish trend? Just looking at what the 4 hours have done after I hit this high, is it an uptrend or a downtrend? Let's be fast. Let's be fast. I need everyone to be interactive. A downtrend. So far so good. The overall trend says after the market hit this point right here, it has been coming down. Are we correct? Good. So the next thing you want to do now is to identify the structure. So what has been the most significant structure on the 4 hours? You can see the low, you can see the lower high. You have to bring out the most significant structures. You have the slow right here, you have the slower high right here, and we have the market right here. And the current market price is right here. Do we understand so far so good? So it kind of makes sense. It kind of makes sense what the market is doing. If you are lost, please let me know. I want to see everyone's chat. I want to see everyone's chat. Does everyone understand what we got going on? Perfect. Perfect. So our goal now is to identify the most significant lows and highs. On the 4 hours time frame, remember that our area of focus now on the daily time frame is all of this level. So we want to see the behavior of the market between this low and this high, and we want to amplify it on the 4 hours time frame with the context that market could either go up or it could either come down. So on the 4 hours time frame, what do we have? From this high to this low, what is the most significant trend? Obviously the downtrend. Now, does this person understand now? The person asked me to repeat again on the 4 hours. Who's the person? Okay, good. So now, let us now bring out the structure. We have the market start to move on lower lows, lower high, lower highs, but the most significant lower high is this right here. Then it dropped down right here. Then we have the most significant low again, then it dropped down right here. So what do we have? We have this level on the 4 hours, and we have this level right here for the value area on the upside. So let me identify. We've got this level right here, and we've got this level right here. So I'm going to use the blue so that we can be able to identify that this is the 4 hours. So we've got this level right here. As you can see, we've got this level right here. So what do we want to do? Our area of focus now is where? This point. So let's take it down to the 1 hour. Notice how we are dropping down from the top floor. We're taking it down. Okay? So looking at the 4 hours, the 1 hour time frame, what has been the most significant structure? Or the trend, perhaps? The trend has been what? Downtrend, right? And this has been a structure right to this point. Okay? So have we been able to answer our 3 questions? What is the direction of the trend? Direction of the trend? What is the direction of the trend? What is the structure of the trend? Low, lower high, low, and the market is making what seems to be this point right here, right now. So what do? This is where you wait. Then you identify this right here. Then you wait. You've been able to break the market down. Now, this is now where the real trading starts. Where you now start to say, okay, price is rejecting off the support area. If market can continue to change the structure right here, that we can be buying right here, that means we can find a trade opportunity on the break right here, find our stop loss and take profit. Is it beginning to make sense, guys? Is it beginning to make sense? Because now we have a structure right here, the structure leading to the downtrend. Do you see it? So that means all you have to do right here is do what? Wait. Now, can you see what I mean when I say that the multi-time frame analysis is only a vehicle that identifies potential opportunity? Because I'm done with my analysis, does it mean that automatically I have a trade entry? No. This is not the point where what makes you a trader starts to show off, which is the psychological part. So the multi-time frame analysis brings you to the point of where the market is. It brings you to the point where you could find a potential trade opportunity. But does it mean that you're going to find your opportunity? No. That is why you will see professional traders wait for days, wait for minutes, wait for hours. Some even wait for weeks for those opportunities to form. So now let us do a little bit of let us just guess. So hypothetically, let's look for every opportunity that could be present. Let's say the market went ahead and break this level and retrace back. What do you think is happening? Uptrend. Are we correct? What if the market comes down right here and break this level? What do you think is happening? What do you think will happen? If it goes back down and break, what do you think will happen? Perhaps going to go back down to the down. And this is the point where after this break confirmation happen, you want to wait for the market to give you some kind of retracement back, right? Some kind of retracement back. You find your entry right back the moment it breaks and you're good. Now, these are the different kind of trade opportunity that start to present itself. So the multi-time frame analysis brings you to your point of entry. So these are key value area. Another key value area I want you to look at is the 61.8, which is what will now introduce me to key value areas in the market. Do we all understand multi-time frame analysis excellently? We've got 45 minutes more. Do we all understand multi-time frame analysis excellently? I do not expect you to replicate this immediately. That is why I'm recording this so that you can watch it over and over and over and go practice. It would be unrealistic of me to expect you to understand it immediately. So now, notice how everything we've been doing, I've been identifying the highs, which is resistance, and the low, which is support. Now, there are other tools in the market that can help us identify these value areas. Notice how I tag this as what? What did I call them? All of these zones, all of these areas. What do I call them? Value areas. Right? Value areas. These value areas are areas where the market has the most recent, action. In this case, this is also a value area right here. In layman term, a value area is any point where the market rejects and open up an opportunity for a sell. You see, open for a buy, open for a sell, right? So at this value area, our goal is for us to be able to look at what the market does in this value area, okay? And take the opportunities that the market gives to us. So in this case now I'm already bringing you now into entry, okay? Your analysis does not mean you get in. There has to be certain things that you must consider before you find an entry. That is why you must be patient. And those things that gives you the confirmation to either enter or not is what your strategy is. Those are what your strategy are. So when people mention what's your strategy is what confirms the opportunity you have in the market, if it's worthy of entry or not. But before we get into strategy, let's talk about key value areas real quick. I want us to stick to time. Key value area. I just want you to pause the multi-time frame analysis. What are key value areas in the market? So I'm going to be telling you what key value areas are in the market and the tools we use to finding these key value areas in the market. Key value areas in the market are areas where the market finds significant rejections. So let me show you real quick. Notice how you never know we were getting key value area all along. Look at them, right? Let's go to the 4 hours time frame. What are the key value areas that you can see right here? Do you see the value area? Right here. Let's go to the back. Do you see the value area right here? Those points where the market hits and all of a sudden the market find a reversal is what we call value area. Do we understand what value areas are? Because you need this value area when you are doing your multi-time frame analysis. Those are the specific spots. Now look at this analysis we were just done doing. The only reason why I'm waiting, guys, is because I'm waiting for the market to find me and sit down on a perhaps value area, then give me a rejection. Then I'm able to do what? To perhaps buy in the market. This is just an expectation I'm putting right there, though. I'm not saying that's what the market will do. Let's say I have a value area right here. If the market can find it, I'm only waiting for what? A break so that I can continue to buy. Or perhaps, let's say the market rejects right here. Hold up. Let's say the market rejects right here and it starts to go up. What happened? The moment it breaks, this level have become the value area because this was the point where the market reached when it broke it. All I'm gonna wait for is retracement for me to buy. Am I correct? Do you understand what I'm saying? So value areas are those areas, those specific spots where the market touches, and now after your analysis, you see, your multi-time frame analysis is supposed to bring you to the airport. Did I make that analogy earlier? It's like a vehicle that takes you to the airport before the airplane takes you to your vacation, your destination spot. So the airport that we're talking about, which is this area of opportunities, are these value areas. Your multi-time frame analysis should bring you to this specific point. Because when you know that the market might reverse right here, all you need is 1 or 2 confirmations that confirm that, okay, it's going down. So let us enter right now. Does it make sense to you? So the multi-time frame is the vehicle. The value areas are the airport where the market takes you to, and your airplane is your strategy you use to confirm if it's good for a ride. Do you understand this 3 analogy? Your multi-time frame analysis is your vehicle. The value area is like the airport that you get to, and your strategy confirmation is the flight that takes you to your destination, which is your destination is profitability. So while you're done doing the multi-time frame analysis, if I want to go further now, I could bring out my Fibonacci level right here and say, okay, I want to see if this Fibonacci level is going to reject. If this Fibonacci level should reject, what does that mean? That means this is the airport. This is the value area that all the analysis brought us to for the next flight that is about to happen. And the moment this breaks, right, depending on the strategy I'm going to teach you, right, for you to find an entry, then you can hop in on the flight and you're going to your destination. I'm just using this for an example. Or perhaps the market breaks this level. That means that, look at this, right? This becomes the new value area, right? That means all the value area we had been looking for was this, right? And now perhaps maybe the market retraces and then you're able to get in as it continues. Do we understand this clearly? Do we understand? Our time is fast spent. Do we understand? So let me introduce you to these value areas. The value areas are specific spots, where markets opens up a reversal, which in turn creates opportunity for the trader to find a trade entry. Is this all clear? Do we all get it? So now that we understand what reversal areas are, value areas, right? So what tool can we use to obtain them? Now, this is how you start to see how simple Forex trading can be. In all of this, guys, we only have what? 3 tools. Number one, we have our support and resistance. Number two, we have the Fibonacci levels. And number three, we have the trend line. I arrange them according to their order of importance. The Fibonacci and the trend line and the support resistance are on the same level. Then we have the trend line. Now, these are the three things. That means, let's go back to the chart. That means this Fibonacci level, right, could change the direction of the market, which is currently on a downtrend. This rejection could facilitate this move and turn it to an uptrend. And all we have to do is wait for us to find an entry. Is that 100% clear? Is that 100% clear? Or perhaps when we take out this right here, notice that we've done the multi-time frame analysis to bring us to a point of entry, right? Or perhaps when you connect this trend line right here, sorry, let me use this. This is the lowest point. This is the lowest point, not this one. And I will tell you about that later. This is the lowest point. So you use, for you to draw a Fibonacci level, or let me just say right now, for you to draw a Fibonacci, let me zoom it out. For you to draw a Fibonacci level or a trend line level correctly, you use the candlestick that closed the lowest. You use the wick of candlestick that closed the lowest. In this case, is this candlesticks, right? Is this two candlesticks right here? So your trend line should be drawn like this. Do you see it? Is that something new you just learned? Let me know. When you want to draw your Fibonacci, you do not use this level. Rather, you use this level. The candlestick, look for the candlestick that has the lowest body close. It is this one right here, this red candlestick. It is not the grain, because the grain opened and closed above. The one that closed the lowest, you use the wick. So if you want to bring out your Fibonacci, right, you use this one, this one. That is where you get the actual move. And I can prove that to you. Let us digress a little bit. Let me show you that. Look at this. You could have thought that this is the low right here and this is the high right here, but you're very wrong. You know why? Because this candlestick is not what closed the lowest. Now let's look at the candlestick that closed the lowest. The candlestick that closed the lowest is the smaller red candlestick. Am I correct? Yes or no? Then you bring out your Fibonacci to this low. Then you go to the candle that closed the highest. Notice how we got an accurate 61.8. You could have gotten, this could have been your value area. And this break of structure, depending on where you enter, if you enter on 1 hour time frame, maybe perhaps this break of structure will have gotten you a buy that you could have gotten to the upside. So learn how to use the Fibonacci correctly. You can't find me upload this on my YouTube. I'm either sharing it on the bootcamp or in my masterclass or one-on-one session. I know many people are going to reach me out after this to further their knowledge. It's okay. It's a usual practice. And I recommend the masterclass for anyone. It's just good for you to have a complete knowledge. But everything you need will be taught right here. Now, now notice how you can't enter straight on the fib level. The reason is because when the vehicle drops you at the airport, aren't you going to check in and they confirm that you're good to travel? That point of your check-in is your strategy. You need a strategy to confirm that opportunity. That's what I'm teaching you, and that's why you're here. So these value areas, right? I want you guys to watch this over, and I want you guys to understand trading more from the relative example I'm giving to you. You will never forget that. So whenever you just remember, we are not here for Fibonacci yet. Let's just continue. We have limited time. We have less than 40 minutes more. So these value areas are either support areas, right? Fibonacci area, which is right here, right? Or the trend line. Now, let us go and talk more about these value areas right here. You see, all of them, they have one job. All of them have one job. And their job is to find area where market reverses. And the funny thing is, all of them are tools that occurs in different form, but it does the same job. Let me give you an example. The trend line, for example, is what? If you watch the trend line video on the YouTube, is a diagonal what? Support or resistance, correct? All it does is help you find support level. In this case, support level. Am I correct? Let me see you in the chat. The only difference is that it's on a diagonal basis. What do I mean? This is horizontal, this is vertical, and this is diagonal. Okay? So the trend line is a diagonal support resistance. It does the same job that a support level and resistance level will do. Look at it. The market is making a move. It got back to this point. It made the move. It got back to this point. You were able to find support right there. Now, tell me, do they do the same job? Do they do the same job? Yes or no? They do the same job, but in a different form. Am I correct? Okay, let's look at the Fibonacci. Does the Fibonacci does the same job that they do as well? And I want to start breaking Forex market down within this slide, because I need you to start questioning things that you know. Now look at this. Let's say the market is moving on an high right here, and then all of a sudden the market starts to drop Now, and you brought out your Fibonacci level. This is the 61.8. This is the 50.0. This is the 38.2. This is the 23.6. Now, if the market gets right here and rejects, has the Fibonacci acted as a support level or not? Yes or no? Has it acted as a support level or not? Or perhaps you're trading the downside right here, then you brought your Fibonacci level from this level to this level, then you have your 61.8, 50.0, 38.2, and 23.6. Has it acted as a resistance level? Yes or no? The same way this acted as a support, as it acted as a resistance level? Yes or no? So now tell me, is there any difference between the job of these three things? Is there any difference between support, resistance, Fibonacci level, or trend line? Is there any difference between them? By the work they do not have any difference. Am I correct? By the result of the job they do, they help us get the same information, but they come off in different form. So if all of them obtain the same information and they come up with different forms, why do we now need the three of them? It's very simple. Let's go. Why do we need the three of them? Why we need them? You see, there are some situations in the market where what is going to give you the confirmation would be the trend line. Sorry. Right? There are some situations in the market that the only thing, right? Let me use this. Wait, let me just bring it down. Look at this right here. Push, 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 and push. Now, in this case now, what gave you the value area? Is it the trend line? Right? Yes or no? Is it the trend line? Let's be fast. Is it the trend line? Now, perhaps sometimes you might find the horizontal support and resistance at that same area. Now, look at how the two of them are giving you the same information. Or perhaps there are some days where you kind of bring out your Fibonacci, and this might coincidentally be the 61.8 level. Now, look at how the three of them does the same thing. So what is the idea? The idea is that whenever you are done with your multi-time frame analysis and you are finding these reversal areas, these value areas, you have to utilize those three tools. Look at the one that is available. Sometimes the Fibonacci might be available. Sometimes it coincides with the trend line, just like we see right here. Look at it right here. In this case, what do we have right here? We have the trend line, and we have what? The Fibonacci. So it tells us that this level right here might actually be a very strong level where the markets might come to this point right here and turn downtrend into an uptrend, and all we got to do is wait for pullback and for us to buy. Am I correct? So are you seeing the job of the value areas? Do we all understand? Can you send the chat in? Do we all understand? Do we all understand? I want to teach you the value areas, then I will merge it together. We are still going to merge everything together. I'm teaching you the different sides. I'm glad y'all understand what we're doing. So these are what we call the key value. These are the three tools we use in finding these value areas. So now that we now know that the multi-time frame analysis is what brings us to our place of opportunity. The place of opportunity is what we call the value areas. These value areas are obtained with three tools, which is what? The Fibonacci, the trend line, and the support and resistance. Now it now makes sense. So when the market now gets to this Fibonacci, these value areas, confirmed by either these three being present at the same time, two of these three being present at the same time, perhaps one of those three present at the same time, at that particular point in time, what is the next thing we want to do? Now we want to look for confirmation. So that is now the fact that we are at the airport now. We need our baggages to be checked to be sure that we are good. So that baggage is being checked is where I now introduce you to our strategy. Notice everything we've been doing. Let's go to the beginning. Notice everything we've been doing was what? Multi-time frame analysis. Now, in between this multi-time frame analysis is now where we have what? What is the job of this level? So let me take some things off. Let me take some things off real quick so that I can update it and you guys can see it for what it is. Now, under the multi-time frame analysis, right, it's now safe for us to have what? We have what? The key value areas. Area, which is what? Number one, support and resistance. Number two, B. Number three, we have the trend line. Do we understand? So what we need to get to this point is the analysis. Then what brings us to our point of potential entry is all of this, plus what we call our strategy. And that is what is going to lead us to finding entry. Do we understand this? Do we understand this, guys? Let's go fast. Do we understand this? We got 20 minutes. 20 minutes. 20 minutes. Give me a second. Let me go get some water. Give me a second. Okay, I hope we are all enjoying the class. Are we all enjoying it? Let me know. Is it more fun or more technical? Is it less technical? Is this the least technical Forex explanation you've ever run into? Notice how I'm not talking about any other blocks and I'm not giving you guys complex terms, right? Those are only technicals. If you can understand Forex trading from the most simplistic part of it, right? It becomes fun for you. Like I trade Forex trade the first market in a very fun way. Like I find it intriguing and interesting. I look forward to the next day. So now we've been able to establish an analogy so far. I've been able to say that you have this guy right here, which is a trader. wants to go to an island for vacation. However, this guy right here has to board the vehicle. Oh my God, I don't know what direction this vehicle is facing. Oh, I was able to get it, right? And the vehicle takes this guy to where? The airport, right? Where we have the airplane. Okay? Now, for this person to get from this point right here to this point right here, oh my God, it's a fish. Don't worry. So, for this person to get to this point, something has to be done right here. Something has to be done right here. It has to be screened right here to be sure that this person is able to get to this point. So the process of screening is what leads us to our strategy. Because this guy made an effort to get to the airport does not guarantee that he's going to get to this place. You need certain things. They want to be able to check your visa. They want to be able to confirm if it's valid or not. They want to be able to confirm if you're moving with contrabands or not. Am I correct? So the airport right here is your key value area. This guy right here is your multi-time frame. Okay? And this dude right here is a trader. And this whole environment where all of this is been, taking place is the market environment. This is the market environment. And this destination right here is actually to your level point of profits or loss. Notice how I never put profit alone, because I'm giving you the reality that you could do everything you're doing and you still end up in loss, right? That is, let's not just say profit or loss. Let's put it to our trade exit area. Now, your feedback of your vacation is what is your profit or loss. Oh, do you enjoy the vacation? It was good. Yeah, that was a profitable trade. Do you enjoy the vacation? It was horrible. Okay, that was a losing trade. So this is the phenomenon, right? So we're at the point of what? Strategy. So this is the point where I introduce you to my strategy in the market. Hopefully I'm able to cover it. Our strategy. Now, we are going to redesign this back and we put all the details. You'll see all of these 5 frames. We're going to redesign it in a more detailed manner. And I'm going to save this particular thing and send it to you guys. After we're done with everything, we are going to save it maybe beginning of tomorrow. We're going to make all of it when I'm refreshing, because I have to refresh your mind for this. Then I'm going to save it. If you can print it out and put it on your wall. If you can look at it every day, look at it every day, because this will give you the mental arrangement of everything that you got to do. Does this make sense to you guys? So the details of the overview of all your trading, notice this is still the framework. By the time we're done with everything, I will give you an overview and put the minor details right there. So it's going to look more like analysis. After your analysis, you find your key reversal area, then you put your strategy. Okay, what is our strategy? This is our strategy. What type of strategy do we have? Blah, 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 blah. Then after that, you get your entry, right? We're going to get that. So what is our strategy? The name of our strategy is called the reversal strategy. It's called the reversal strategy. That's the label. And literally, what does reversal strategy mean? It's very simple. It came about upon the discovery that the market moves randomly. And whenever the market moves randomly, there are key areas where the market rejects. That means if I can find this key area, which is our value areas, I can find trade opportunities at this point of rejection. If I know the market was going to reject right here, I can go ahead, I can be ahead of everyone and make a sell. If I know it was going to reverse right here, I can make a sell right here. If I know I'm going to reverse right here, I can make a sell at this specific area. So let's go back to the live chart so that we can be able to find all this level. Those areas are where we call our key value area. So let's take all of this off. Those areas are where we call our what? Key value areas. They are what we refer to as our key value areas in the market. Okay? So what do I mean? If you know that the market was going to reject right here, if you have one or two confirmations, you could have sold down. Am I correct? Yes or no? If you know that the market was going to reverse right here, if you have your right confirmation, you could have gotten a buy. Am I correct? And the same thing, if you know the market was going to reject right here, if you have a superpower to test if the market was going to reject right here, and you have your confirmations to it, you could have made a sell. If you know the market was going to reject right here, you could have made a buy. Now, that if you know is only being made possible by the reasons of your analysis and finding this value area. And your confirmation is the strategy that gives you your entry. Does that make sense, guys? So now, let's get back. Our reversal area, our reversal strategy is very simple. So let's assume that you've done your multi-time frame analysis. At the end of your multi-time frame analysis, you've been able to get what? Your key value area right here. And the structure of the market that led is right here, and your market is right here. Your strategy is simple. The strategy I want to give you is super effective. You do not need, it's super effective and consistent. When the market is at this point of reversal that your multi-time frame analysis has given to you, all you need to do is wait for structure change. Don't wait for reversal candlestick. Usually the market will come back, give you what we call the double exhaustion, what that you guys call the double top. It will break right there, and all you have to do is enter upon the break and close. Okay, so wait for the break, and close. Right? And this level right here is a point of what? Exit. In this point right here, we have a point of exit as well right here. exit 1 right here. And we've got exit 2 right here. This is the overview of what our strategy looks like. Now, these are the things I want you to know about the strategy. I don't want you to just use it as it is. Our strategy involves your ability to be able to track the lows, the last lows right here. And when you look at the last low, you put your support level right there. You want to see the behavior of the last low with this value area. If the value area is strong enough to reject the prices and breaks the last low, then you got to sell. Do we understand this perfectly? Now, I don't want you to just see a double bottom or a double top. Do we understand this perfectly? Do we understand? Do we understand this perfectly? Now, I will break it down further. Okay? I'm going to break it down further. I'm going to break this down further. I'm going to break this down further, guys. And you know what I'm going to say? I'm now going to break it down further and say the elements of our strategy, because I've gotten so much experience with people I mentor, and they seem to take what I'm saying for it. So the element of our strategy, now you guys pay maximum attention. We end right here. I don't want to bombard you guys. Probably we end right here. We end right here. We're supposed to talk about one more, right? Which is the variation. But let us see how far we can go. The element of our strategy means number one, we must have a key value area that may potentially, now look at the words I'm using, may potentially reverse, or let me use the word reject the market. Now, I just don't want you to see, many of you guys just look at it. Oh, it looks like a double top. If I find a double top right here, no. Why can't you look at it in a way more deeper manner than that? Then the second element the strategy must have is perhaps your entry time frame, which is the 1 hour or the 30 minutes, as the case might be. This must have a key value area at your time frame of entry. In this case of what we did right here, give me a second. Let me bring everything right back. Now, in this case of everything we did right here, let me just bring it out this way. We add this low right here at an area of support. Do you see it? And we add this we add this high right here. So in this case, do we validate our condition? Number one, it must have a potential, an area of what? Value area. In this case, where are the two value area? Either this or this. We are not sure of where it's going right here. So what led to this value area? In this case, we have what? Area of support, equal support. So this begins to give you an hint that, okay, this is double support. It might be strong, it might reject price. As much as the market is on a lower or downward trend, right? So your first element is like you're at the airport, they want to check your passport first. So what seems to be the passport first is it must have this value area, because the value area is what we are going to benchmark the behavior of the prices against. So what is the second thing that it must have? The second thing it must have a structure. You must now be able to find the structure leading to that level. So in this case, we have the higher high. In this case, we have the higher high, we have the higher low. Higher high, higher low. Higher high, then we now have the last higher low. Do you understand it? We have the last higher low right here. So perhaps, let's say the market, upon reaching this point, it gave our first reaction for us. Then it went back up. What happens? All you have to do is to move this right here and bring it right here. We have the last high low. And what are you trying to do? You're trying to see the behavior of the market at this point. Is he going to break it? Is the market going to break above? Or perhaps the market is going to break below. If the market breaks below, that means that this value area right here, has been respected. And the change and the break of the last structure has been evident, and it has closed below it. What does that mean? A trade opportunity. So the multi-time frame analysis will provide you this point. And your key value areas could either be factored by, maybe this is a Fibonacci level, maybe from a higher time frame, this might be a Fibonacci level, or perhaps this might even be, hold up, or perhaps this might even be, maybe a touch of a trend line. It could be anything. Do you guys understand what I'm saying by this, explaining this? Do you guys understand? Please let me know. I want us to finish with this. Do you guys understand? So this reversal area could actually be factored either by the trend line, the Fibonacci, or support resistance. Now, the first element is what? We must have a key value area. The second element, which are labeled, is we must understand the structure and identify the structure leading to the key value area. That's second element. I'm teaching you how to think. The third element, this is the second element right here, all of this. The third element is found right here. No, the third element is actually found right here. This is the place where you have to be patient. Patient to see the behavior of the key value area with respect to the structure leading to it. So this is the third key. This is the third element. This is the third element. This is the second element. This is the third element. Notice how the third element, I circle patient. When you watch this over again, let me repeat it. I circled patience. The third element is patience, which is the most important one. The fourth element is this point right here. Wait. More patience. Let me put it that way. More patience to see the break and close of candlestick below the last low or high, as the case may be. In this case, is because it's an uptrend leading to downtrend, is the last low. And after this, you find your entry. Finding your entry upon risk management. We are going to touch that later on. The fifth element, I'm literally giving you guys a rule. This is what I'm going to be using to prepare a trading system for you guys. Okay? I'll give you guys a trading system gift. The fourth thing is you want to get your TP1 right here. TP2. So the fifth element here is what identifying my exit. Hold up. The fifth element right. The fifth element is to identify exit based on the market condition. So you do not decide if you want to set TP1 or TP2. The market condition sets that for you. And let me teach you real quick. Let me teach you that real quick. Okay, I have 10 slides. Let me take this one off. Now look at this. I used an analogy. Let's say you are trading an uptrend and the market is moving this way. And all of a sudden, you've identified, you did your monetary analysis. At this point, you're having a 61.8 level, which is what drives your what? Your value area. You have a 61.8 level right here. When the market, when you now finally wait for your first element has been obtained. Your second element is what? The patience. Now, patience had paid off, you've seen the break. In this case, because you are in the direction of the market, which is what? The low, you are on the high, you're on the higher low, you're on the higher high, you are on the higher low. What do you think happens right here? You most likely take your profit at the next higher high, or even break even at this point and let the market keep riding. So we have two market conditions where we must take our profits. Number one, when you are going in the direction of the market, you should ride the whole move to the next major high or even beyond in the direction of the market. But if you are trading against the trend, take your profit always at the 61.8 Fibonacci. This is new, but always take your profit right there. So let's say we have this and the market came to this level, and all of a sudden, maybe in the past, maybe the market has been coming to this level, right? Or perhaps, let me not even use this. And the market kept coming right here to this point right here. So let's say what factored this reversal area. Hold up. Let's say what factored this reversal area was area of trend line. And perhaps maybe we have an area of previous area of resistance right here. And the market made a move like this. And perhaps we've identified this level right here as our value area. And, we look at the behavior of this level with the market, and the reversal area was strong enough to cause the break. And the market has been moving on a what? Low. We have the high. We have the higher low. When you find your break and close right here, be looking forward to take your profit at the 61.8, because when the market gets right here, it might continue to move. Are we very clear on that? Are we very clear on that? Please send your chat in. Does this open an insight? If you guys can reflect on many of your trades, you will see that many trades that were supposed to be winning trade ended up in loss because you don't know this. Yes or no? It is not only the 61.8. Okay? There are some cases in the market that you have the previous area of what? Let's say the previous area of resistance is right here. The 61.8 is right here. Take your profit right here at this point, because this level might reject the market back and turn this level now to a new value area in direction of the trend. Let me show you an example. Let me show you guys an example. Let me show you guys a quick example. I want to show you guys a very, very clean example of a trade I had taken. Yep. How many of you guys remember this trade I give to everyone? If you remember, if you're on my free channel, do you remember when I gave this trade? I know a couple of you remember. And I asked you guys to take profit somewhere around this point. Do you remember? This was the reason why. Guys, when you go back on the daily time frame, you will see the reason why I took my profit right there. It's very simple. The market made a push. You can see it was a very clear, then it started to move on smaller higher low. It was a clear uptrend. So any sell I get right at this point, right, we probably end at the 61.8 of the overall move. It has to end right there. And look at what the market did. The market came right back to this point right here, right, and rejected. Now imagine you kept holding that the market was coming to this level. Do you see that you must have closed in loss? Now, what helped me to be able to identify that information is I looked at the direction of the market. You can see the importance of knowing the direction of the trend. Do you see why I started with that in the first place? And do you see how everything is intertwined? Yes or no? Do you now begin to understand why it's very good for you to know the direction of the trend within every time frame you're in? So now, on the 1 hour time frame, I do not have a bigger context. It looks like a downtrend has started on the 1 hour time frame, but then I knew that on the 4 hours time frame we are still going up. I took my trade right here. I remember that I gave you guys a trade opportunity right here for us to ride up. I think I closed manually at this point. You guys remember that? I dropped this analysis on YouTube. And in my analysis, I said the price was going to come to this level. I was good with my profit. I didn't want to be too greedy. But notice how when the market was going in the direction of the market, it went to this point right to the stop. So we don't have to worry about what? The 61.8. We don't have to worry about what? The 61.8. So when you're trading in the direction of the market, let's go back to the whiteboard. When you're trading in the direction of the market, so the two conditions for trade exits. Now, notice how we are touching on trade exit already. Because within our strategy defines entry for us and it defines exit for us. This is the reason why I love the strategy. There are so many strategies that will only define an entry point for you, but will not tell you an exit. Your strategy should define an entry point for you incongruent with your multi-time frame analysis. And it should define an exit point for you incongruent with the multi-time frame analysis. So we know that we have element of our strategy. We're going to be ending now with respect to exit. We have number one, when we're trading in the direction of the markets and you seem to find a reversal area or value area right here and it breaks, keep buying to the highest point, and even when it gets to this highest point, break even at 90%, look at an opportunity of riding it as long as possible. This is what? Direction, market, trend. If this is not in the direction of the market trend and the market is moving like this and you finally found an entry right here, do not hesitate to take your profit either at the previous area of support or the 16.8, whichever comes first. In this case, the previous area of support came first. So what do? You take your profit right there because you could turn this level to a new point and you could buy. Have you seen the reason why many of you guys have lost on a very good trade? Yes or no? Are you beginning to see it? Are you beginning to see it? Are you beginning to see the reason why you've lost on so many trades, many good trades? You started very well, but you didn't close very well. So this is the whole idea. So on our next outline, we're going to talk about introduction to our reversal, strategy, variation. Now, let me give you guys a preamble. Sorry, give me a second. So the idea is, now this is where experience and expertise now comes in, and it feels like I'll be giving you guys a cheat code because I'll be building everything I'm teaching you into a trading system and I'm going to be giving you guys for free. And I do not expect you guys to share it with anyone on the free channel plus the video. This is for you and this is going to help you. So now I want you to look at this. Remember that we said our strategy is like this, right? We said we want to look at the reversal area, the element number one. We want to look at the behavior of the price with the last higher low, then the break of the price, and want to move. Now, this alone is not the way the market actually reacts with reversal with these value areas. This is not the only way. With my 7 years of market experience, I've been able to master different ways the market changes. So I'm going to give you the 3 most consistent ways. I'm going to give you the 3 most consistent ways that repeat over time. You can find it over time. If you do not find the first point at this area of reversal to confirm it, you're going to find the second or the third one. I'm going to give you the 3 major ones so that when you do not see this one and something else comes up, you know that you are feeding off my experience of what I've mastered over the years, back tested for many years, and I'll give them to you, the different ways in which they form. So this is where we're going to start on the next class. So thank you guys so much. We spent 60 minutes extra. I took 60 minutes of the time, but I had to finish it because I'm passionate about you guys understanding it. And this is going to be the end of our class. Do we have any question? I'm going to take questions in 5 minutes. Do you enjoyed the class? Was it simple? Oh, you want to see me? Okay. I don't have an Instagram profile. I don't have a face. Don't worry. Maybe sometime very soon. Maybe tomorrow class or next tomorrow class. I might have to show my face. Why do I not start on the weekly time frame? Just cut yourself the stress. The daily time frame has every information the weekly time frame has. Okay. The daily time frame has every information the weekly time frame has. Okay. So I want you to cut yourself the stress, right? I want you to cut yourself the stress and just start from day time frame. What I'm showing you guys is a cheat. I've tried it over the years, right? I've tried it over the years, and I can tell you that you do not need all those complex information in the market. Trading could really be that simple. So thank you guys so much. The summary of everything we've done today was to identify the mental framework of the market, right? And start from the first one and look at it in depth. Notice how one links to one. Notice how multi-time frame analysis leads to one. It leads to what? You can see how the multi-time frame analysis, how it leads to finding entry and how it's going to link to the risk management. Notice how finding entry with our strategy leads to finding exit, how everything connects, right? This is everything. So by the time we're done with everything, you guys have the knowledge of it. We now bring everything together. Okay. The reason why I don't use monthly is the same reason why I don't use weekly. They are higher time frames. Every information you need from a higher time frame perspective is on the daily. Save yourself the stress. I only work with 3 to 4 time frames, the daily 4 hours and 1 hour for the most part. They're 30 minutes sometimes. Can you imagine how trading can be simple if all you do is trade 1 or 2 pairs and just analyze over 3 time frames alone with this mental framework in mind? Come on, it can be that fun. It can be that fun. You draw trend line on every time frame. There's trend line on every time frame. And the Fibonacci tool I use is just the default tools. You don't have to tweak anything. You don't have to make it complicated. Just use the normal Fibonacci. The normal level I use is the 61.8. That is the only level I use on the Fibonacci. I don't use the 50.0. 61.8. If the 61.8 level does not give me a potential reversal area or key value area, the support and resistance will give me on the trend line. So I don't have to tweak my Fibonacci into 50.0 or 78. It's either 61.8 or not. The 61.8 either touches break and respect back with a structural confirmation, or I don't use it at all. Make this simple for yourself. Notice how from the beginning I've never used any complex term. I've only used a simple term. The beautiful part of this is when we're done with everything and we're bringing everything together, it will make so much sense. Tomorrow, we're going to talk about the strategy. Then I'm going to introduce you to the variation. Then we're going to talk more about, we're going to revise everything. We're going to revise everything. We're going to talk about the difference. We're going to talk about how to use this, then the effective execution of the reversal strategy, then entry mastery. We're going to enter the risk management and trade exit tomorrow, and it's going to be nice. I've had so much fun as you guys have had so much fun. This is what I love doing. I enjoy doing it. Some of us are not here for the clouds. We are not here to make a name. We just want to create real impact. And we're coming from a place of experience and a gift of teaching. And I hope you guys have been able to learn so much today. Always use the analogy of the vehicle to the airport being the point of key value area, which is potential opportunities. The screening is using your strategies. The destination, right, is your exit. Always use that analogy. Always use that analogy. Always use that analogy. What takes you to your destination is not the vehicle, it's not your multi-time frame analysis. What takes you to your destination is the airplane, which is your trading strategy. So thank you so much. The video is going to be available later today, immediately after this class, and I'll see you tomorrow. God bless you guys.